I think what the mistake people think is they have to buy a whole Bitcoin, and I mean, they can buy a Satoshi, a Satoshi every day instead of a latte. And more importantly, if Bitcoin network value plays out and Bitcoin, yeah, let's take Urian's number. Okay, so it's a 20 times increase from here. Anyone who's long Bitcoin won't care about inflation.
Right.
That's the important thing, because it's really just the dollar getting cheaper. It's not, I mean, that's really what they're experiencing.
Financial analyst and Bitcoin bull, Tom Lee, discusses his prediction for all Bitcoin investors and why he believes $400 trillion is about to pour into Bitcoin. After the Bitcoin halving earlier this year, which Lee says marked the beginning of an absolute surge in price, we saw multiple all-time highs for Bitcoin. Bitcoin is down just over 8% this week, currently sitting above 97,400. But Lee believes we're about to witness one of the biggest price rises in history since the creation of the dominant cryptocurrency. The story has become even bigger in 2024 because of the Bitcoin ETFs, with thousands of institutional investors across the United States now buying Bitcoin. The demand for the leading digital asset has increased exponentially and more than the daily supply. This has caused a never-before-seen supply-demand imbalance for Bitcoin. And Tom Lee says everything is about to change.
Bitcoin is now essentially a bona fide asset class. I mean, it has the backing of BlackRock, which is the largest asset manager in the world. Larry Fink, even today, was speaking post-earnings about how important Bitcoin is to the future of BlackRock, and it's something that they're encouraging clients to adopt. I think that the mistake someone might make if they're interested in Bitcoin is thinking they have to go 100% of their portfolio into it. They only need to put 2% or 5%. And, if you think about someone sitting on cash, that's like 1 year's worth of interest on their portfolio. They just have to dedicate to crypto. We made that recommendation when we first wrote about Bitcoin, that they should put 1 to 2%. Today, if they didn't rebalance that recommendation, it's 80% of their total portfolio. So it's been a huge winner for our clients, and many have told us it's really changed their lives by making what they saw as a kind of a low risk bet, 2% allocation into crypto. And I think that's how people should look at it today, because Bitcoin isn't peaking. It's not that widely adopted yet. There's still so many skeptics, and there's many financial firms that are restricting their clients from having access to exchange versions of Bitcoin. So the ETF today is not even approved for many firms, and it tells me that there's still a lot of future holders of crypto. And I think that mistake someone could make today thinking Bitcoin's not relevant is the financial system does work really well in the US for wealthy Americans, but even in America, I think that only 45% of Americans actually have a bank account, and another 25% consider prepaid credit cards and debit cards as their primary form of banking. I mean, banking is very expensive in America, and that's for one of the wealthiest nations in the world. Outside the US, crypto is really going to prove to be a much more low-cost banking system for folks, especially if they want to do remittances and move money around the world. I mean, I think Bitcoin's blurring, but even what the definition of money is, it's already blurred the definition of community benefiting from holding something. Because, in a traditional financial system, let's say you take Amazon and you have Amazon customers, and they contributed to the growth and the fact that Amazon is one of the largest companies today. It's really the customers and the loyalty of the community of buyers and sellers. But the only people that benefited from that are actually the shareholders, the ones who actually provided the capital to Amazon. So it didn't create value for the community itself. I mean, Bitcoin is so different, right? Because Bitcoin is benefiting those who are actually holding it and using it.
Embracing an unyielding enthusiasm for the Bitcoin realm, Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits as we head into 2025. Don't forget, our partners at Jamie Tree Finance have launched a daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now.
That's why I think it is really blurring what an asset is, because it's blurring loyalty and rewards along with equity and capital and rent seeking. I mean, all these concepts together. So the idea that it's also blurring the definition of money, to me, makes sense. I mean, I've been following markets for for more than 3 decades, believe it or not. And so I've experienced and covered many recessions. Recessions rarely happen when markets are all saying a recession is imminent. Markets participants aren't that smart. So the fact that so many people think a recession is imminent, and we see it. I mean, we do many meetings with clients, institutional investors, that view recession as their base case. I mean, that would just mean everyone suddenly is a great forecaster of the economy. And as you know, nobody can forecast the economy. We don't try to forecast the economy, but the only reason we think a recession is less likely is because everybody thinks a recession is likely. Mining is important for Bitcoin. I mean, there is no Bitcoin without mining. And the miners, I'd say it's been trickier as equities because I'm thinking about them as stocks because they are essentially beta to Bitcoin. But I'd say over the course of the cycle, they should outperform Bitcoin. But it's, of course, I know it's been tough because, we have a lot of clients that have been long miners. And, today's been an okay day, but really for this year, it's been very painful for them to own it versus Bitcoin. This is another buying opportunity in our view. 2024 has proven to be a year where the market's been strong and it has eluded many opportunities for sustained weakness. I know yesterday's pullback was really painful, but to us, I think it's a good opportunity for investors here. As context, the market has been bleeding lower. If you look at internals for the last 10 days, yesterday looks capitulatory because not only did we have a 90% down day, but the VIX, the spot VIX, exploded by 75%. There's only 4 times in history where it's risen 60% in a day. So yesterday was the 5th time in its 35-year history. Of those 4 times, the market recovered all of its losses within a week, 3 out of the 4 times. The 4th time it took a month. So I think what you had was people panicking to get out of what they thought was a momentum trade that's ending because we're so close to year end. But here's the interesting thing. The forward VIX futures curve barely moved. So it was almost as if people were seeking protection through the VIX yesterday. Unfortunately, when markets get nervous and they're risk off, and of course, buyers disappear, stocks that aren't as liquid get hit harder. There's a lot of folks who don't want Bitcoin over 100,000, and some of it may be the exchanges themselves are concerned because there is a pretty low supply of Bitcoin available over the counter. So you have a supply shortage. I'm still confident Bitcoin's going to close much higher before year end, well above 100,000 before year end. December historically is a strong month, but when you're up more than 10% in the first half and it's an election year, December's been up 100% of the time. The second is yields have moved down to pre-election levels. The 10-year's at 4.1. That's good for multiple expansion. The third is, I think it's been surprising, but sentiment's actually turned negative the last 2 weeks, even as the markets rallied. To me, that's a contrarian bullish signal. And then finally, we still have those 2 puts, the Trump put and the Fed put. And I think that means you still want to buy any of these dips.
Tom Lee challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Lee asserts this journey is just the beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Lee highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Lee also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Tom Lee? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?